Hey everyone, welcome back to the channel. Today I'm distilling the absolute best day trading principles I've gathered from years of live tape watching, direct mentorships, and institutional equity sales experience. Everything you need to level up your intraday game in just 15 minutes. Day trading isn't about luck or secret indicators. It's a high-intensity discipline built on preparation, strategy, risk control, execution, psychology, and review. Implement even one of these 6 pillars, and you'll see clearer setups, tighter risk, and better consistency almost immediately. Pre-market preparation and routine. Most day traders jump into their screens at 9:30 without a plan, chasing whatever ticker moves first. That chaos breeds poor decisions. Why it matters. A structured pre-market routine primes your mind, sharpens focus, and surfaces the day's best opportunities. How to do it? Start 30 to 45 minutes before market open. Scan your watch list using volume and volatility filters. Look for unusual pre-market spikes, earnings announcements, or news catalysts. Check key economic calendars for scheduled releases. Draw levels of interest, overnight highs and lows, VWAP anchors, and prior day supply and demand zones on your charts. Journal 1 or 2 high-probability setups you want to trade once the bell rings. Precision entry and exit strategies. Entering too early or too late transforms potential winners into losers. Exits based on emotion kill P&L certainty. Why it matters. Clear entry and exit rules remove guesswork and control risk-reward dynamically. Alright, so here's how you actually do it. You want to use micro timeframe triggers, like say a 1-minute break of a prior 5-minute structure level, or even a tick-by-tick momentum shift in level 2 data, for really precise entries. Then, you're going to define your stop loss based on chart structure, just beyond the opposite side of your entry pattern. For example, outside a flag or just under a demand zone. And don't forget to set multiple profit targets. Take partials at half R, 1 R, and then trail the remainder using a 1-minute ATR-based trailing stop. Real-time risk management is honestly where a lot of traders slip up. Too many day traders risk a fixed dollar amount per trade, but totally ignore their aggregate portfolio exposure or intraday drawdowns until, well, it's just too late. The reason this matters so much is that controlling risk as you go prevents those emotional blowouts and really helps preserve your capital curve. So, here's how you actually manage risk in real time. First, define a hard daily loss limit, like for example, 2% of your account, and just auto-halt trading when you hit it. Next, track your cumulative P&L continuously. If you're down 50% of your daily target, stop for the day to avoid revenge trading. Also, use dynamic position sizing. Scale into runs of winners, and scale out as you get closer to your daily goal. And if one strategy underperforms early, just reallocate your risk budget to your next highest edge setup. So, manual click and drag orders are honestly just way too slow in fast-moving markets. Missed fills and slippage can really eat into your profits. The thing is, faster and cleaner executions help you get entry and exit prices that are, much closer to your trading model, and that actually improves your realized R multiples. Here's how you do it. Leverage hotkey-driven order entry and bracket orders, or OCO, to place your entry, stop, and target all at once. You might also want to consider a lightweight API connection or a DMA platform to shave off those precious milliseconds. And don't forget to monitor your average fill slippage. Just compare your expected limit price with your real fills, and then adjust your algo's limit offset as needed. Emotional mastery and discipline. These are honestly the backbone of every successful trader. Even the best system fails if you override signals in fear or greed. Impulse trades and hesitation kill your consistency. Why does this matter? Well, emotional discipline turns rules into reality. Without it, your plan never materializes. So, how do you actually build that emotional discipline? Implement what I call cold checks before every trade. Pause for a deep breath, confirm your setup fits your written criteria, and mentally commit to execution as if someone else placed the order. Use a real-time emotion meter. Just rate your anxiety and confidence on a scale from 1 to 10 after each trade. If your anxiety spikes above 7, take a mandatory 5-minute break and end each session with a brief guided breathing or visualization exercise just to reset for the next day. End-of-day review and iteration are honestly game changers. Most day traders don't review their trading until weeks later, if ever. Without feedback loops, mistakes just repeat. Why does this matter? Daily reviews accelerate learning, refine your edge, and reinforce positive behaviors. That's the complete day trading blueprint. Follow these 6 pillars: pre-market prep, precision entries, exits, real-time risk control, high-speed execution, emotional mastery, and disciplined review, and you'll transform random trades into a systematic, repeatable business. If you found this valuable, click the first link in the description to book a personalized coaching session, where we'll tailor these practices to your exact account size, markets, and goals. Don't forget to subscribe for weekly deep dives on microstructure, order flow tactics, and advanced intraday psychology. See you on the tape. Happy trading, R multiple, and your emotion rating. Highlight patterns, which setups worked best, which hours were strongest, and when you deviated from your plan. Finally, circle 1 or 2 improvement targets for tomorrow. Maybe stop entering without confirmation, or tighten stops on momentum fades. That's how you keep getting better, one day at a time. That's the complete day trading blueprint. Follow these 6 pillars: pre-market prep, precision entries exits, real-time risk control, high-speed execution, emotional mastery, and disciplined review, and you'll transform random trades into a systematic, repeatable business. If you found this valuable, click the first link in the description to book a personalized coaching session, where we'll tailor these practices to your exact account size, markets, and goals. Don't forget to subscribe for weekly deep dives on microstructure, order flow tactics, and advanced intraday psychology. See you on the tape. Happy trading! Which hours were strongest, and when you deviated from your plan. Finally, circle 1 or 2 improvement targets for tomorrow. Maybe stop entering without confirmation, or tighten stops on momentum fades. That's how you keep getting better, one day at a time.